welcome back to Forex Scholar. Starting year 2024, I will be doing weekly update on three things. Number one is the past market trend review and the news and how does it affect the future markets. Number two is the past week review on the preparation and setup that we have taken. And lastly is the preparation of the coming week. Without further ado, let's dive into the market trend of the past week. This week, US index has been very strong, with an overall increase reaching a 52-week high. The main reason is the strong performance of TSMC quarter report. The 5 nanometer and 3 nanometer chips are driving the performance and becoming the major trend ahead. The quarter report of TSMC has once again proven that AI will be the strong trend and the upcoming strong demand, especially in year 2024. The strong data also influence the gold market and the US market, which is the retail sales growth. Only what I will do is I will go to Forex Factory and I will just filter the last week news. So this is the news here that is affecting the gold market. The core retail sales, whereby the actual is 0.4% against the forecast of 0.2%. Retail sales growth was overly exaggerated, causing a brief drop at that time due to a significant decrease in rate cut expectations. However, after market calmed down, both gold and US stock market continued to rise. New York's manufacturing sector experienced a sharp decline. Michigan confidence increased and Americans' confidence increased, significantly reaching 78.8, leading to a strengthening of the USD to 103. This causes the retracement or the correction of the gold market. So now I will show you what actually happened during the news release of the retail sales news. So it's about here. It's 9:30 p.m. in the night time at my time zone, and it's at 8:30 in the morning in US. So as you can see here is a significant retracement here, exactly until actually this is a demand zone, which I will show you in a while. So after the market come down, it actually rise back consistently and back to its uptrend. Alright, that is the update for the market trend and the news effect of the last week, week 3, January 2024. And now I would like to go to number 2, which is the review and reflection of the trade that I took and the preparation that I've made on the week before. So you have to make sure that your preparation is actually working and align with the trade that you enter. We do not enter the trade that it's not in our plan. So we don't enter a trade blindly. Normally, I don't hold the trade over the weekend or for a few days. So I'm a day trader, so I would just to draw the nearest support and the resistance, or call it demand and supply zone, using the daily chart. So these blue lines, which is from a daily time frame, are the supply and the demand zone. So as many of you who follow my channel closely, you do know that I will always use this thing. This is the best chart pattern that I love, which is the parallel channel. As you can see, it's obviously the price is always moving inside this parallel channel and it's in the trend direction. Also, I would like to include a demand zone here from the daily time frame and the 4-hour time frame. As you can see, if we draw the Fibo, it's also at the 61.8% of the Fibo. So now what I can see is in the next thing is potential of a downtrend parallel channel during the correction. Let us move into the 4-hour time frame. As you can see, I can plot a downtrend parallel channel here during the correction. From the top, yeah, it's exactly touches it and moving inside within this parallel channel. But bear in mind that the overall trend is actually in an uptrend. So currently it's only facing a temporary corrections. So as you can see from here, since the week before, it's actually hitting the resistance and it should be coming down. As you can see here in the 15 minutes time frame, the price actually hit the upper trend line of the parallel channel and then came down. We can actually draw a resistance here on the 15-minute time frame. So our first trade idea here is to aim for a short sale when the price being corrected near to the upper channel trend line, and then the target will be all the way down to the bottom line of the parallel channels. So I am anticipating that after the price hitting the lower trend line of the channel, it will be bounced off, continue its uptrend. So the second trade idea here is that we are going to enter long if the price reaches this zone. So I'll mark it with a circle or eclipse, and we are going to target the price all the way up to the upper channel. So what you need to do now is you just have to wait, and you can see the price actually retraces up, but then there is no sign of rejection at the resistance there. So you're just not going to entry there. So when you see the price getting near to the upper trend line, the parallel channel, there is a bearish engulfing candle, which is a rejection. So this is a very strong sign of rejection, and you can see the MACD is weakening and towards the dead cross. So from there we can actually enter a short sell. So our target here is always 1 to 2 risk reward ratio. So your set loss will be somewhere above the previous high, and then the target is all the way down. So the second one, it should be targeting a 1 to 4, but the total entry of these two trades should not be taking more than 3% of your account risk. You may adjust the risk according to your comfortable level. It could be 2%. So in the total return, you should get about 5 to 7% depending on your risk appetite. So now we let the price move. So now we let the price move. Alright, I'll stop here. As you can see, there's a double top here with a divergence of the MACD. So which indicates that our entry is valid and safe here. So the price is moving downward and hit our TP1. So when we hit our TP1, we immediately adjust the set loss of the second trade to break even, so that we are totally at a risk free now. So you can see TP2 also hit already. So the next trade, we just need to wait until the price entering this zone. Okay, now the price has entered our circle, our eclipse here. So as you can see here, there is a small double bottom, and there is a divergence in the MACD. So this is a valid entry. If you follow through my free course in my YouTube channel closely, you will know what I'm talking about. So again, I will enter two trade. One is the first trade will be 1 to 2 reversion, and the second trade is 1 to 4. So like to do a swing trade or hold for a longer term, you can hold until you hit the upper uh, channel of this parallel channel. So what we would like to say is, you do not need to trade every single minutes of the day. You don't need to monitor the chart every single minute. You just need to wait until the price come to your zone. You just need to do preparation. Use 30 minutes to prepare in the beginning of the week, and then you just need to wait for price to come down, come to the zones, and then you execute your trade. You get 2 trade in a week, so you will get about, if you use 1 to 2 risk reward ratio, you risk 3%, you are getting 6%. From this 2 trade, you are actually getting 12% already. So that's more than enough. Even you miss the first one, you get one trade, you get 6%. So in a month, you're actually getting 20%. So overall, that's the idea. So next, the third thing that I would like to share today is on my preparation for the upcoming week. So we should maintain this chart because the daily chart and the 4-hour chart is still valid. Just remove this 15 minutes time frame resistance here. So as you can see, the price is going to the uptrend, the 15 minutes time frame. So there's actually a short supply zone here in 15 minutes. I see last Friday hit and come down. But definitely that is not our interest of zone. We always look for the zones from the upper time frame. 15 minutes time frame, let's draw a Fibo. As you can see, this is a Fibo zone. So between 0.5 until 0.69 is golden zones. So as you can see, when it matches with the upper parallel channel trend line, so you have already have two confluence there. So the third confluence that you are looking at is actually on the candlestick or the MACD. So if there is a double top or bearish engulfing with huge volume, or there is a bearish divergence, then there is the place that you should enter a short. So that is the first trend idea and preparation that I'll be waiting for. So now, the second trend idea of the week that I'll be waiting for is to wait for the price to be corrected down to the next demand zone. So now we will draw a Fibo here and we will look for the zones that are replicate each other. As you can see, the green zone here is Fibo and also the demand zone from a daily time frame. And now I've located a yellow zone here, which is more detailed from the 15 minutes time frame one. So if the price come down to these yellow zones, which is lies inside the green color zones, then I will look for a long. So please do not do a buy limit over there. So what I will do is just I will wait for the entry signal when it reaches there. So it's either a bullish engulfing candle, it's a double bottom, it's either a higher low, or there is a MACD bullish divergence over there. Then only I will enter the trade normally. So let me repeat myself. I will not put a buy limit over days because it may break down the zone and come down all the way to the lower point of the channel. So basically, these are the two trades that potentially I will tag in the upcoming weeks. So is there anything changes in the market trend or anything changes to the zones, I will update through my Telegram link below. So please make sure you subscribe to the Telegram channel and also hit the subscribe button of the YouTube channel so that you will not miss any update of the market, and also you will not miss out any free tutorial course from time to time. I hope you enjoyed the video. Please like and subscribe.